Hello, fellow Thrift Savings Plan or TSP investors. My name is Greg Miller. I'm a fellow TSP investor with 15 years of experience in the military and over 20 years of experience investing in stocks, bonds, mutual funds, etc. This channel is dedicated to an experiment to see if intermittent trading of the TSP can increase our overall returns. Check it out. The benchmark that I use to compare my performance is the longest dated lifecycle fund currently found in the TSP. At this time, or at the time of creating this video, that is the L2065 TSP fund. For the first quarter of 2023, the L2065 fund returned 7.68%. That means that if you had $100,000 at the beginning of the first quarter of 2023 invested in the L2065 fund as your retirement assets, you would have $107,680 in the account on March 31st at the end of that first quarter. This is a stellar performance, probably something that you normally would expect over the term of an entire year. But in this particular case, you have the entire investment in less than, or in a quarter. So yeah, great performance. Good job, those people that do the management of the L2065 fund. Quarter 2023 is the quarter that I finally decided to bite the bullet and start attempting this trading strategy. Therefore, I'm going to spend a little bit of time talking about where I was at the beginning and then identify some of the decisions that I made, some of the mistakes, some of the errors, some of the correct successes that I did, and kind of give you an idea of how valuable or not this trading strategy appears to be. At the beginning of 2023, I had 40% of my total invested portfolio in the TSP in the G fund, another 40% in the F fund, and then 20% in the C fund. I have been beta testing my strategy for a number of years now, and this is my first quarter where I decided to bite the bullet and actually hit it as hard as I can. There is a little bit of a learning curve that you may see in my investment decisions as I go through this area. Here is a brief summary of my transactions. On January 9th, I transferred the vast majority of my funds into the C fund, with 85% weighting in the C fund, 10% in the G fund, and 5% in the F fund. On the 30th of January, I did a redistribution, putting 75% into the C fund, 20% into the S fund, and the remaining 5% in the G fund. On February 17th, I redistributed all of my holdings into the G and the F fund at 50% weighting each. On March 24th, I redistributed all of my funds into the C and the I fund at 50% weighting each. And on the 31st of March, I redistributed 30% of my investment portfolio into the C fund, and then the balance, 35% each, into the S and the I funds. I made the following errors during this quarter. Number 1, for not going 100% into equities on January 9th. At that time, I should have gone 100% at least into the C fund, but preferably into the S fund, and perhaps into the I fund as well. Number 2, not following my trading strategy when I moved funds on February 17th. In this case, I should have moved everything into the G fund and then waited and not worried about the bond fund at that time. This strategy did come out to help me in the long run because the bonds they blew up. They got a lot better when we had the Silicon Valley Bank and the other banks that had issues in the middle of March, and the bond fund really responded quite well to that. That doesn't necessarily mean, though, that I would have been able to participate in that had I not been in there. So I'm thinking about that a lot. I don't know if that is a trading strategy I should employ where I consistently go into bonds, because if I was looking at like a 401k, that would mean that I would want to put the money into that 401k and make sure that the trading gets into a bond fund, because I may not have a money market fund or the G fund equivalent in those other investment accounts. Along these same lines, I also made a 50% allocation into the I fund on March 24th, even though the I fund wasn't completely in the buy territory at that time. I did benefit from that. So here's my thoughts on this. We only have 2 opportunities to purchase stocks, bonds, or the bonds, or the stock funds. So here's my thoughts on this. We only have 2 opportunities per month in the TSP to move money among funds. And so you kind of have to think about, well, do I want to move into the equity funds even though they're not quite ready and have the potential that they might blow up on me? Or do I want to just go ahead and not worry about it? I think my thought is I'm okay with moving it into the bond funds, so the I fund in particular, but maybe on the equity side I need to wait until the buy signals are there. I did wait until the buy signals happened on the 31st of March, and that's part of the reason why I moved some of the money into the S fund at that time. I've included in this video a chart of the activity, the green being moments when I put money more into equities than into the G or the F fund, to indicate that those are the times that I have participated in the equity markets or gone long the stock market or equity markets at the time. Part of the reason why I want to put that in there is just so you can kind of understand when I put in my trading, so that you can kind of see when I've made my decisions. I made the following errors during this quarter. The red lines represent the moment when I've moved funds into safer investments, or quote-unquote safer investments, like the bond fund, and then the other fund is the G fund. The red line on the chart indicates when I moved into funds that were a little bit less exposed to the equity markets, including moving to the I fund and the G fund on the 17th of February. So we didn't have a whole lot of extra moves. We could have probably just gone straight C fund, G fund, and I fund, and then back to the C fund if we wanted to. But I'm trying to understand whether or not the I fund and the S fund might be worth including into my investing portfolio. If we took a $100,000 portfolio and compared my results with the results of the L fund, the other managed fund in the TSP, I returned almost at $100,000. I basically earned about just under $4,000 for my efforts. So not a bad thing based on $100,000. I mean, if we did that into $1 million, we're getting close to almost $30,000 or $40,000 for a couple of hours a month. So there is some definite value in learning how to do this and do it well. Thanks for watching my quarterly report on the TSP trading activity for Q1 of 2023. If you are interested in having a downloadable where I more fully discuss and break down all the numbers for you to identify how this performance happened and some of my musings and thoughts on this, you are welcome to go ahead and do that. I will have a link to the downloadable below. You can take a look at it. Also, as part of this training, I also am providing a small TSP Basic Investors course for those that have never invested in the TSP. Some of the things that you can kind of think of in order to get to a point where you could have that $100,000 and your time would be worth $4,000 to do some sort of trading strategy like this. On that note, as TSP investors, you have made the commitment to be part of something bigger than yourselves, and you've made the discipline to make the world a better place. In my view, your investments should not suffer for that. So I want to make sure that those will also be better for you as well. I look forward to seeing you next quarter. Otherwise, you can catch me every week on my Tuesday Trader Market Minutes. Thanks, bye.